What's up guys, Aaron Bennett here in this video going over Simon Dixon's videos 6 and 7, his final two videos in the series. So going through a recap of the previous videos, he says that cash bidders and their shareholders would get the benefits of the assets if there's just a cash bid that is accepted by Celsius, and that is not what we want. He says, or we structure in a way where the bidder gives some equity to the new company. So Simon's BF Global giving 20% of their equity to this new company and structure it as a fund, which we've talked about in previous videos. And then we, as the equity holders, get the upside if the market recovers. So this is just a recap. Basically, we would have equity in this example, BF Global. If they win the bid, then we would get equity in the mining company, equity in GK8. We would get the insider clawbacks that could be coming back to the estate, and any loans that would be paid back to the estate, we as the creditor would get that money being paid back to us in whether it's like a dividend or just cash payments because we are equity holders in this fund. Talking about Voyager, he said that they locked in their haircut, but they did not have all the assets that Celsius has. So big difference between Voyager and Celsius. Voyager was very simple. They did not have any loans. They did not own any companies that they used their customer funds to buy, like what Celsius did. Simon says it's important to take out all the regulatory issues, like how Voyager is, I believe, removing VGX token, or FTX is trying to get rid of that, I believe. Simon says it's important to remove Cell token because that would be a big deal for regulators. And later in the video, I'll talk about why regulators, Simon says, really wants us to succeed. They want this to be an example of how a reorg can happen in a Chapter 11. And more recap, they want a custody solution, securities business, and a loans, so everybody would have a home who got shafted by Celsius. More recap, Simon wants to have a professional fund manager to manage all of this money and all these assets, and let's say in 2 to 3 years, the next bull market, an IPO of the mining company would take place. He would want GK8 to compete with Fireblocks, which is already, I believe, a multi-billion-dollar valued company. And talking more about a bidder giving equity, if BF Global, which is the parent company of Bank to the Future, if they give equity into the fund, we all would benefit from that equity as well. And this would even more diversify the investments that the fund has. So if the mining company is a slam dunk, 100x, whatever, but other companies fail, that's part of venture capital, and that would actually be appropriate. And before we go into this video, more recap, a cash bid is no good, but if there's a cash plus reorg, we as creditors would get a vote if we didn't like their plan. Ultimately, though, we need to find a bidder who will present our plan to Celsius and the UCC. So now getting into video 6, scarcity equaling not enough coins. So Simon's real big thing in this video is getting out of a scarcity mindset where everybody is fighting each other for their coins. The longer we fight, Simon says, the higher the likelihood the examiner will move this to a Chapter 7, and that's a lose-lose for everybody. The next slide says abundance. Do I want more coins or more of the fund? This is where we will get to decide if we want more of our coins or if we would like more of this venture capital fund. And it's a really cool opportunity for non-accredited investors inside the United States who would otherwise have no exposure or no possibility to join a VC fund to get exposure to one. And there will be a secondary market on Bank to the Future, which already exists, where if somebody wants to sell their fund or sell their shares of this new fund, there will be people who want to buy it because they think there is a long-term gain that this fund can have. Again, the next bull market, a lot of these companies can IPO, and a lot of people will trust that the fund could be way more profitable than just buying crypto right now. So the next slide talks about how all the ad hoc groups basically want 100% of their crypto. We have custody, withhold, stablecoins, those with collateral, and also people whose loans got liquidated. They all have a case. Many of them have their own legal counsel and ad hoc groups to say, hey, this is why we deserve 100%. And Simon says there needs to be some compromises in order for everybody to win and not have this go to Chapter 7, which Simon again reiterates again and again how devastating that would be for everybody. So this slide talking about the ad hoc issues, he says option 1, we dilute the earn. So the previous slide, basically the coins can only come from earn or a settlement in the future. Earn is obviously where most of the coins are being held. So diluting earn, he says, will come through staying in the court and letting the court decide all these things. And he says that could take a really, really long time. Option 2 says compensate earn and give up coins for our fund. So what this means is that people who have their coins in earn could give up more of their actual crypto, but get more equity in this new fund that I've been talking about for a long time now. He also says for loans, we can use the venture capital fund as collateral. This is something really cool that Salt Lending could actually engineer. Simon says there's a way to use financial engineering, which is what he has been doing for decades, to satisfy everybody as long as there is a home for custody, securities, and loans, which in my previous videos, I've explained where all those homes will be. Custody would be through GK8, securities would be Bank to the Future, and loans would be with Salt Lending. So here it says settle through securities. Basically, some will want to sell and some will want to buy the equity. Just going over, there will be a market and there will be a way for a lot of people or everybody to basically get what they want through the secondary market of buying and selling securities. And this is an example of how Bank to the Future right now deals with equities. Again, people want to buy it and people want to sell them. So let's talk about some clawback issues. Basically, the company that bids, which Bank to the Future may bid, BF Global, they can say in their clause that they don't want any clawbacks for non-insiders, which Simon agrees that retail clawbacks would be devastating for the entire community, which I'll talk about a little bit later. He says that the Tether loan could be clawed back, so there are larger institutional clawbacks that can happen, and obviously insiders could have some clawbacks as well. And those insider clawbacks, Simon says, could go to the fund. So we as equity holders could actually get insider clawbacks if those happen. So next he's talking about funding issues. He says capital, so new capital, can be raised with a securities company. Someone behind the scenes like FTX can buy everything with cash, or he says BF Global, for example, can offer their own equity, which Simon has proposed at 20%, and also find new investors to invest in the new co. So what Simon's talking about is that he is actually planning, I believe, to pitch his own investors, people already that are invested in Bank to the Future, to invest more money, get more cash to basically fund this new co and bid against a giant company like FTX. So just going through this slide, if there is a cash bid, there is little upside for us. If we go into option 2, bid equity into the fund, that's what Simon's company wants to do. We share the upside. So, for example, if I had some equity in the fund that also Bank to the Future invested in or put equity into, then I would benefit if Bank to the Future ever went public. So we would share in the upside. Or again here, launch a bidder pitch. That is what Simon is planning to do with Bank to the Future. High net worth individuals, accredited individuals will be allowed to put more money in to basically bid against like an FTX. So now he's talking about some legal issues. So Bank to the Future built some tech to resolve a lot of the issues, and they've been involved in a lot of revisions for certain people or certain classes of investors to invest. These are some of the things that Bank to the Future has been involved with. But Bank to the Future factors in everything, and they want to be in full compliance with all of the legal issues, obviously. But down here, it says bankruptcy code, unlimited non-accredited investors. So here he reminds people that because we are in Chapter 11, that non-accredited U.S. investors can actually get equity in a new co, which otherwise would be impossible or only limited to a certain amount of high net worth accredited investors. The next slide just kind of going over the new home for everybody. So custody would have their home, home, securities would have their home, and lending would have their home. GK8 would cover custody. Bank to the Future would cover securities, and Salt Lending would cover the lending. And Simon says that they can integrate all the technology with GK8, with Bank to the Future, and with Salt Lending. So you can take the best user experience from all of them and combine them into one solution. So he finishes off talking about scarcity versus abundance. He says, let the court handle the scarcity mindset. Basically, if we are all in scarcity mindset and we're all fighting for our coins and we're not realizing that we have this fund that is available through Simon's plan, then the court will eventually figure all that stuff out. And that will take a long time. It'll take more money. And again, the risk is going into Chapter 7, which is no good. So the Twitter recap, somebody said, how do we avoid Celsius choosing the cash offer? Simon says that Voyager actually chose the cash and reorg plan, and Simon just says that the cash and reorg plan that he is proposing has to be way better than just a cash offer. He says it's good that Kirkland represented Voyager as well, and Simon also thinks that the UCC for Celsius wants Simon's plan to go through, or something similar to Simon's plan to go through. So the fact that Kirkland represented Voyager and they chose a cash and reorg, plus the UCC for Celsius is in support of Simon's plan or something like it, is good news. Somebody asked, who should be the fund manager? Basically, whoever raises the money can manage the fund, and it can be a very competent investor. Simon also has people in mind as well. It could be someone from TradFi, and this TradFi person could use their knowledge and also combine it with someone's crypto knowledge to have a really, really solid team. Simon also says there doesn't need to be a fund manager. With Bank to the Future, there is no fund manager. It is not actively managed, but Simon thinks for this situation, there should be a fund manager to maximize the upside. So Celsius Loans said that Celsius does not actually want a reorganization. He says that trust is broken with Celsius, and maybe take the best Celsius employees, potentially, and they can work with the NewCo. Simon again says if all the ad hoc groups are united, they can get out of Chapter 11 faster. Simon mentions that the bidder would put equity, their own equity, into the fund like BF Global has offered, and therefore their equity would be a part of the fund that we as equity holders would actually have. So we as equity holders in this example would get exposure to Bank to the Future, which I think is pretty cool if they win that bid. So Simon says they would do a funding round in Bank to the Future to raise cash to make it a competitive bid. So Simon says ideally he would want a few different IPOs. He says for Earn, he mentions BlockFi, which is trying to do that now. They're trying to go public, and then they would have mining and GK8, which could independently go public and have their own IPOs. He again says they could take the best of Salt, Bank to the Future, and the technology of Celsius to create a team with the best user experience and user interface and have a way to combine all of it. Simon says he wants to take BF Global public over the next few years, and again, that 20% of equity that they would give to help us, or they would give to offer into this company, we would actually benefit if Bank to the Future went public. So it's pretty cool. I mean, this new venture that Simon wants to do, it would be a very broad exposure to the crypto market, and not accredited investors in the US would get access to this. So I actually really like this idea. Simon says he does not want to be the fund manager, but an HR person could hire and maybe screen some people, and possibly we could even vote on it as a community who would be the fund manager. So let's talk about the final video, 7 of 7, tax issues. Tax assessment, where are we now? So Simon says that the FTC, Department of Justice, the CFTC are all in the mix right now, and we are getting documents from Strato saying that yes, they are getting involved. So he says this may take a while and more money to get set up. Basically, how to set this up with the least amount of tax consequences for everybody. Simon says there will be a huge capital raise to execute this. Like I've talked about earlier in this video, he will be pitching this to the investors of Bank to the Future. So phase 1 right now, he says, are we dealing with the IRS, which is in the US, or the HMRC, which is in the UK? He says, were taxes paid by Celsius correctly? Simon says that there was a $9 billion loan between the US entity and the UK, so we need to figure out basically what the heck happened. He also says more transparency is needed to know how and why Celsius filed taxes the way they did, and again, what those implications are for us. So there is still a lot that needs to be figured out regarding taxes. And he says this will just take time and money. And he says if you are a tax specialist or can offer insight into this very complex issue, he would love probably to talk to you and for you to be involved. So Simon thinks that Celsius should make all of this information public. He also says the UCC can file motions to gain access to this info, or it can be left to the bidder in the data room to figure all this out. So again, there's just a lot of unanswered questions. Here you can even see, is there a bankruptcy fraud exemption? Was a deposit a disposal? A lot of things over my pay grade, but a lot of questions that need to be answered. Phase 2 reorg right here, it says they need to consult Regulatory and Securities Counsel to figure these things out, including who owns the funds, as well as bankruptcy and fraud exemptions. The questions here: can investors invest in a bidder security without creating a taxable event? Can claims be converted into a fund without creating a taxable event? And is there a bankruptcy securities exemption? So Simon says that this is high-level restructuring, and it's very complex, but it's something that I can tell he kind of gets excited about trying to deal with, because financial engineering is something he's been doing for 2 decades. So this slide talks about 3 different types of securities. He says whatever the structure is used for the new co, Bank to the Future has all the different kinds of securities, and they've done them all successfully. And they can also leverage what SALT lending has done as well. So essentially, whatever happens, Bank to the Future, it seems like, has experience dealing with everything. So the next slide, tax assessments. What happens when we win or lose? Well, if Simon's plan wins, there will be a taxable event when returns are made to us, basically when the dividends are paid to us, or when we make money because we hold equity. If we lose, there would be a write-off, which may actually be beneficial as well for certain people in different tax situations. So he says, obviously, find your own tax professional, and especially when something happens, when a decision is made, there will be significant tax consequences. And this next slide explains it. He says, what are the tax consequences when the fund, potential fund, receives and distributes a return? What are the tax consequences if the bidder sells the fund in a margin call? So that would be, I believe, talking about loans. And the last question, does Celsius have tax losses to be utilized? Essentially, if Celsius owns the coins or not, that greatly affects potential tax issues. The final slide, he talks about perks for staying. So obviously, we would want more people to not cash out and to actually ideally convert their crypto into more of the fund. So again, reminding everybody, we'll get around 47% back as crypto, and then the remainder will be hopefully made up with this fund, especially when they IPO. That's how they're going to fill the hole. So here he's talking about some perks for staying. He says they can make intangible products reasons for people to stay with a NewCo. Perks and incentives for taxes, Bitcoin experts, etc. So he has compiled a lot of different products here talking about different things that are like educational products. So again, these could be things that he can implement to keep more people staying in the fund, which would increase the value of the fund. So let's talk about the Twitter Spaces for this video. Simon says we need to engage with regulators and let them know what we want to do so they understand everything. We can treat the claims, which could be future insider clawbacks, as assets, and he says those funds, the future clawbacks, could actually come back to the estate and therefore to us, the equity holders. Talking about clawbacks, he says this would be horrible for the industry if we had a platform or a bidder that wants a relationship with future customers. There would be no clawbacks, because if FTX says, hey, all you guys come over here, by the way, we're also going to claw back a lot of crypto, that would create a huge disconnect and people would be pissed off at FTX. So if you are against retail clawbacks, then you definitely want Simon's plan or some sort of cash reorg to go through. We do not want a liquidation. Simon says that regulators want this to be a positive outcome for creditors, and Simon thinks they will support what is best for retail. Regulators are looking at this as an example. I mean, this is the first of its kind, and they want this to go well. And the final thing Simon mentioned, and I am obviously summarizing this hour-long Twitter Spaces, but it's important for people to think about building wealth over the next decade, not just making back all the money in 1 year, but he is very sensitive to the fact that for a lot of people, this was their retirement, and they could be in their 70s or 80s, or even in their 60s or 50s, and thinking about a decade in the future is just not in the cards. So him saying that, he's also very sensitive to the fact that this is a very challenging time for a ton of people. But ideally, it would be, okay, you get your haircut now, but we can also fill the hole with this equity, with everything I've talked about. I'm not going to repeat it. And over the next 3, 5, 10 years, this could be massive. Remember that Simon has been investing in this space, I think, since 2011, and he has invested in a lot of the companies that have, been unicorns and, deca unicorns or whatever. They've made a lot of money. So that is it for his recap for video 6 and 7. And that is it for this series. If anything, guys, I've learned a ton about the process. I've learned a lot about what needs to happen and what are the options for the future of Celsius and all of us who are creditors. Somebody asked, will I cover the other options? I'm happy to. I know there are some other ones floating around in the community, mostly on Twitter. But to be really honest, they're not as fleshed out as this, and I don't think they come with the same team as this, and they don't come with the same level of experience as Simon offers. There's just a different level, right? A different level of competence and also just experience, decades of doing financial engineering. So I can talk about other ones, but from what I've seen, they just haven't been as compelling and educational as me covering Simon's. Ultimately, guys, end of the day, I want all of us to get our crypto back as quickly as possible, have a chance to be made whole, but ultimately get out of Chapter 11, get that liquidity back to us, even if it is a haircut, so a lot of us can survive and pay the bills and put food on the table, and then go from there. So that is it, guys. Thanks for watching, and until next time, talk with you soon, and bye for now.